Let's dive right into this explainer. Look, if you're a young professional, true financial freedom probably feels like it's lifetimes away, right? But today, we're going to build a system that replaces your daily grind with actual passive income, and we'll be exploring 3 totally distinct paths to get there. Just imagine for a second waking up to money that's already working for you. We're not talking about extreme downsizing or moving into a tiny van to save pennies. This is about a concrete mathematical reality where passive income completely replaces your regular paycheck. Specifically, we are talking about $4,000 a month. That is $48,000 a year of pure passive dividend income. It's enough to cover your core expenses and give you the ultimate flexibility to live life on your own terms. 1. The passive income dream. 2. Decoding dividend yields. 3. Path 1. Slow and steady. 4. Path 2. The middle ground. 5. Path 3. High-speed income. And 6. Choosing your financial path. Section 1. The passive income dream. Okay, so generating $4,000 a month immediately, that would require having almost $2 million just lying around on day one. Kind of intimidating, right? So let's start with a highly realistic baseline for a young professional, a $20,000 base, and adding just $10 a day. That's literally the cost of a decent takeout lunch. Section 2. Decoding dividend yields. So what exactly is a dividend? Well, when you buy a stock, you're buying a piece of a real functioning business. And if that company earns excess profit and decides to share it directly with you in cash, that right there is a dividend. To measure this, we use something called dividend yield. It's super simple. If you buy a $100 stock and it pays you $10 a year, your yield is 10%. It is basically the cash produced per dollar you've invested. Now, here is the absolute core trade-off of dividend investing: income right now versus growth later. Lower yields usually offer long-term stability and stronger price growth. Higher yields, they give you massive upfront cash, but with slower growth and definitely higher risk. Every path we're going to look at relies on this exact trade-off. Section 3. Path 1. Slow and steady. We built this first path with Dividend Aristocrats. These are elite companies that have literally grown their payouts for 25 straight years. By combining Lowe's, Next Era Energy, and the SCHD ETF, we get a super reliable 2.67% yield that just safely compounds over time. Running the numbers, taking your 20 grand start, plus that $10 a day, and diligently reinvesting it all, it takes 27 years to hit that $4,000 a month mark. It's a really long runway for sure, but it offers the absolute highest safety. And check this out. By the time you reach your goal, your portfolio is worth a staggering $1.9 million. Those $10 daily deposits are small, but massive capital compounding over nearly 3 decades is doing the heavy lifting here. Section 4. Path 2. The middle ground. Now, if you want financial independence a bit faster, we can use REITs. These are real estate investment trusts, teams that own physical properties like warehouses and retail spaces, sharing that rental cash flow with you. Mixing Prologis, CTO Realty Growth, and Lamar Advertising pushes our average yield up to 5.53%. Thanks to that higher initial yield, your $10 a day strategy actually crosses the finish line in just 17 years. You literally just shaved a full decade off your working life by taking on just a bit more economic volatility. Notice the shift in the mechanics here, though. Reinvested dividends are now the ones doing the heavy lifting, essentially replacing pure share price growth. Because of this, you only need a portfolio worth about $533,000 to hit your income goal. Section 5. Path 3. High-speed income. So what if you want maximum speed? Well, you have to trade away almost all your capital appreciation by using covered call ETFs. These funds sell options to cap their own upside in exchange for massive upfront cash. Combining JEPQ, PEBP, and QYLD unlocks a crazy combined yield of nearly 11%. By prioritizing that extreme cash flow, your timeline shrinks dramatically. With that exact same $20,000 start and $10 a day, you hit $4,000 a month in just a single decade. 10 years. But here is the catch. Your capital appreciation is incredibly limited. We're talking just $35,000 in growth over those 10 years. If the broader market absolutely explodes, you won't. You've traded growth for pure, immediate speed. This portfolio's sole job is just pumping out income. Section 6. Choosing your financial path. Let's line these journeys up side by side. You can have extreme stability and a nearly $2 million portfolio in 27 years. You can have balanced real estate income in 17 years, or you can have high-speed, zero-growth cash flow in exactly 10 years. Because the truth is, all three of these paths work with the exact same inputs, $20,000 and $10 a day. As a young professional, your greatest asset isn't your current bank balance, it's your time. So which trade-off are you willing to make today to build your financial tomorrow?